as investors, we don't have to always agree with all of the particles of ideas of the project, right? So we give our honest feedback, even though sometimes it comes across rough at first. No matter how good your solution would be, people will get, it's like a subconscious turn off for the community to keep using the protocol when the token price goes down, because their rewards will be in the token. So what's the point of using it? Let's move along to another one which has the same scope. In equity, you can sell as much to one investor, but only if they will be boosting your revenue, only if there is a company investing in a company and they acquire a significant percentage of each other because they might be co-developing a product.
Hello, welcome back to another episode of Technology for a Change. This is where we invite and sit down, have a chat with our guests who are accomplished individuals who've been at the forefront of revolutionizing or changing or disrupting the industry. And, this is where we actually learn from, their challenges, their mistakes. And today I'd like to invite a very special guest who's basically a visionary and a true pioneer. It's an inside joke, which we'll get to later. But yes, she is one of the very first miners of Bitcoin and has been using and leveraging that to make an impact. I would love to have you introduce yourself to the audience and from your own words. How's it?
So my name is Amalia, and indeed I was one of the first Bitcoin miners, which has happened by chance and by curiosity. And it has been primarily an experiment because no one knew what is going to happen later with Bitcoin or any other cryptocurrencies that were there, because there were plenty, although they're not as spoken about later. And so I used to run a TV post-production studio and sound design studio back then in Netherlands in 2010. And so we've been already using quite accelerated GPUs. So our setup was very heavy, focused on quick rendering because there was always a time pressure in TV. And so when I say we, I mean me and my partner at the time, obviously. When we came across Bitcoin on one of the forums, we took a deep dive into distributed ledger technology. We were both nerds, right? We had interest in IT since...
I love that.
Since early childhood. So I probably spent most of my free time in my childhood in front of the computer screen. And that came very, very useful later. And so when we had the studio and our custom setup for completely different reasons, we came across Bitcoin, we researched a little bit, and we decided as a crazy experiment that we're going to order anonymously at one of the forums a USB stick with mining software. So we're basically risking losing all of our hardware because it could have had a virus that would basically burn all of our units, right? And what happened is that the software was all right, everything was okay, but obviously we did burn some of the units because we didn't realize that it needs we had a computing power, but we didn't have as much cooling, right? We just had regular ventilators. We had plenty extra ones considering that we have accelerated our hardware at the time. But we had to start experimenting with pleasure with water cooling, right? So we ordered DIY pipes from the internet, and we did water cooling systems, kind of... we basically constructed this as like a fun project, little MacGyver thing, do something from nothing, right?
But you're saying that this was at the TV production house.
So no, it wasn't a TV production house. It was our own post-production studio. So we were contractors to plenty of TV stations. We lived at the time in Hilversum, which is a media city of Netherlands. So all of the production studios were there. We were not doing that to be precise about that and not get in trouble. We were not mining at the production studio of the TV. We had our own production studio at our home office.
Exactly, that's what I was wondering. Like,
where is this head? It's like, no. So obviously,
what do we do with all these GPUs lying around? Okay,
so you're thinking of a big scale of a mining, because nowadays you do need specialized equipment, all of the ant miners, and that looks like a whole house or multiple houses. This is how it looks nowadays, because the power which is needed to solve the issue as far along, which is much more complicated than in 2010. It needs a lot of power indeed. But at the time, you didn't need that much. It couldn't be a regular computer because it would be too slow indeed, but it didn't have to be anything very specific. But we just decided to accelerate it more and more as we just enjoyed experimenting with it. But we had to really emphasize the coding part.
So it's safe to say that you were at the forefront of the blockchain revolution.
is a very tricky word because most of the people that were involved early in crypto, both proof of work and later proof of stake, they were kind of staying on the background. Most of them were anonymous. They had nicknames of forums. Later on, it has changed, but most of the people which were on forefront were kind of not really seeking recognition as much.
All right. I get it. So Amalia, like from there, you ended up founding Mirai Dao, right? Tell us a little bit about that. And two-part question. How did you end up in Dubai?
Oh, how did I end up in Dubai? Well, as I mentioned before, my partner, we live together in the Netherlands. We decided to part our ways, and I have decided that I need a major change. What I mean by major change is change of a continent.
Okay, all right.
I was like, okay, my life starts over. Let's go somewhere completely else. And I thought either it's going to be Singapore or Dubai. So I stayed a little bit in both places, but I definitely felt much more comfortable in Dubai, and I just stayed, and I thought maybe 3 to 5 years, and then I overstayed.
Yeah, that happens with everyone. I was just talking to someone the other day, and everyone comes in for like 2-3 years, explore, and they just overstay. I think, the place has its own magnet. Kind of keeps going, and I guess as it evolves, you feel like you're leveling up with it, and it's just hard to leave, I guess.
Mm-hmm. I mean, it's not a place for everybody because it's very fast, it's very intense, right, and there's a lot of competition as well.
Right.
And so if you don't like to be... So some people enjoy the dopamine of that, and I'm one of those, but it's not for everyone. Dubai, it's definitely not for slow living. So
yeah, I mean, it could get stressful for some. But then I guess the dopamine aspect, the entrepreneurial mindset, every day, that's what we're doing, right? I mean, talking about new ideas every day, critiquing these ideas and making sure that, we're able to create more successful products, kind of pave that way for them. So back to Mirai Dao, an investment and advisory firm for blockchain, Web3, crypto, right?
How did it happen?
How did it happen, or what is your day-to-day, look like?
So first of all, how did it happen? I've been investing here and there alone early as well, and I decided one day that I can create a private vehicle where I'm going to work with liquidity from my own pocket, plus some of the people that I came across and worked with before. And so I deployed the vehicle, and I am focusing on layer zeros, layer ones on blockchain, DeFi. Nowadays also zero knowledge proofs that came to be a very important topic in the last 2-3 years, and obviously hardware acceleration for Web3 as well, and as well as enterprise grade solutions with emphasis on cybersecurity from my side. And it's long only, it's not a hedge fund. We support the projects also with other solutions from our current portfolio. So they're boosting each other revenues. And we're making sure that the feedback that we give, it's definitely pushing forward the project. We don't have to, as investors, we don't have to always agree with all of the particles of ideas of the project, right? So we give our honest feedback, even though sometimes it comes across rough at first. Then later, some of the projects learn working with us that it actually helps them a lot. And this is how my advisory started as well, because some of those projects that I was in discussions with realized like, hey, maybe she can help our colleagues. They're also starting something. It's still in stealth. They don't know if it even makes sense. Let's ask if maybe she wants to talk to them. And this is how it kind of organically piled up. And it was hard for me to say no.
Okay.
So this is how it came to life.
Wow. I mean, you mentioned something about, being too rough, but I believe that's how, investment firm could actually identify whether the founder has it in them to be able to take that constructive criticism, perhaps.
But there are multiple aspects on being rough as a feedback. First aspect is a technical aspect, which is most important, and it will always progress the project. And that's the upside of dealing with a professional investor. Second part of the feedback would be, let's say investor isn't happy with the kind of the deal that they're having. There is not as many liquidity events. Maybe he wants more percentage for less the amount. He wants a lower valuation. That's usually quite aggressive on the project. So that's the other side. So you have to make sure as an investor who's long only that you're not going too aggressive with the numbers that you're looking for, especially in the beginning. Because that will not result in anything good long-term for the project and for your investment and for the community of the project. So you have to remember that it should be technical side, you can go rough, but on the numbers side, you have to remember about the right balance because it's going to come back to you.
So, I mean, let's suppose we do come across a lot of entrepreneurs who want to be able to work in that fintech space and, blockchain or even, embed AI in there. Would you kind of have a criteria set, some sort of anything particular that you may be interested in? There are companies that suggest that, okay, this time we're running a cohort specifically for sustainable startups, green startups, or startups that particularly do XYZ, which often go with the notion of the VC firm itself or their portfolio, their background as well. So for Mirai Dao, what kind of startups or founders would you be interested in?
So
you could just put it out there for the audience.
Right. As in matching with the current portfolio, we would be looking for projects that have strong emphasis on security of whatever they're building and that are focusing on not necessarily reinventing the wheel with yet another best disruptive blockchain in the industry. But I prefer to invest in people that are focusing on finding solutions and upgrades to the current existing blockchains that are good. For example, Ethereum. We kind of got caught up in the last bull cycle on looking for, I need something new. I need something new. I need something faster. I need something better. Let's build it from the beginning so it feels like our own. No, not really. It isn't really the best idea to do that. So I would rather look for projects that are upgrading what's already existent and what has proven to be kind of, so to say, bear market proof, sadly said. And I like to focus on projects that have a very strong business development. For example, there are projects which, obviously, if they're in Web3, they will be leveraging their own tokens as the monetization and the way that community will be boosting their revenue. And before they launch a token, they would come and say to the investor that, yes, they're building, they have MVP, they're showing the MVP and everything is working. And I'm asking myself, why didn't you give early access to as business to business temporarily before you launch the token, because also to launch the token, it has to be a good time on the market. You don't want to load your token on the dump of everything, right? Because that's shooting yourself in the foot. So sometimes you have to postpone the launch, right? Especially if you have a centralized exchange listing, there will be also a part of decision makers when exactly you shall be launching your token. And so you have a ready product, or you have some of the particles of your product ready, which could be used in business to business. You haven't given any access to any companies with an NDA. You didn't do any revenue. So, are you here for business, or what are you here for? So that would be my internal dialogue. And I would rather invest in people and projects that also know how to make it business. Exactly.
Not just come up as a concept or a POC, but rather something that's running. In some cases now, I'm starting to think that, MVP is, ideas are aplenty, and they're all, like, in one way or the other, validated now. But I think now it's more about, the problem that you're solving, or your MMP, which is your minimum marketable product.
Right. But you see, you can have that product and you're still saying to the investor, I didn't monetize it yet. I don't have any revenue because I'm waiting for the right time to launch my token. You could have given access business to business and make some revenue privately.
Right. Yeah, absolutely.
And then you could not only show the revenue, you could also bootstrap more and work faster, right? Yeah. And there is another very crucial component for me as an investor. I see plenty of good projects, especially when team members, the founding members, are quite young people. They get caught in a trap that happens quite often. They get a lot of emails from VCs or incubators that would promise them quick money, big amounts, but they would ask very, very aggressive percentage. And so we're talking about a total token supply percentage, right? So if there is a young team of a good tier 1 to be project even, and they see that, hey, and they didn't even start fundraising, right? Or they just, in the beginning, they're just finding out the first feedback from bigger VCs, so they feel kind of anxious, they don't know what to do, they're scared, they're still bootstrapping from their own pockets, which is not much, and they're kind of questioning themselves, am I going to do this, or am I just going back to my job,
you've bootstrapped this, and you've been there, so you know how.
Right. And the tricky point is, the trap that happens very often is that there are some of the VCs or incubators that will come in and say, we will take 20% of total token supply, we'll give you this much, but you have the first ticket, quick. Let's close this week.
And how is...
What will happen if you give 20% of your total token supply to one investor, no matter if it's an angel or if it's a VC or maybe it's an incubator? What will happen later as they get vested?
Oh, you just turned that around me.
And how much is 20% from 1 billion of total token supply of tokens, for example? It's quite a lot, right? So what will happen if this particular investor gets vested? No matter how long you vest him, at one point he's going to sell. Right. What is going to happen to your project, and what is going to happen to your community? What if there is bear market at the same time? The project will die.
Of course.
No matter how good your solution would be, people will get, it's like a subconscious turn off for the community to keep using the protocol when the token price goes down, because their rewards will be in the token. So what's the point of using it? Let's move along to another one which has the same scope.
Right. So where does the USP lie there? Because the dynamics here, I'm usually involved in these digital products. In fact, most of them are not on Web3, but this is insightful. It's just changed the way I've been thinking about these projects. So
you could look at equity in the same way. If you decide to sell way too much equity to the investor, so in equity, you can sell as much to one investor, but only if they will be boosting your revenue, only if there is a company investing in a company and they acquire a significant percentage of each other because they might be co-developing a product.
Right.
That's a bit different. But when you have a VC that is only interested in getting a big chunk of equity or the token just to give the ticket, and they won't be co-building, they won't be working on something together, that's not going to end up well, in my perspective.
No, exactly. Like you just don't, approach a specific firm or investment firm or VC or investor because of, the capital. You actually approach them because of their capability as well within that specific field. So Mirai Dao, like, how would you go about supporting these startups in the Web3 space?
So what I usually do, I give them my feedback initially, and I really focus on giving a lot of technical feedback. I'm also focusing on giving them the right partnerships with the projects that I'm closer with or I invested in, and they can cooperate on different things like cross-chain compatibilities, triggers, putting the same capabilities in a different protocol, and boosting each other's revenues as well, because nothing comes without the price, but that will be usually a token swap, right? Even if I see a project which has fallen into the trap that we just discussed, I would not reject them first. I will tell them, are you aware that this number that you have given to this particular investor, it's a lot? And they would say, yeah. As we went further in the fundraise, we got the same feedback over and over from different investors. But what do you think we shall do? I was like, I don't want to reject you, but because I really like the project and I think it will make an impact in the market. So sometimes I propose, but it's really up to project to decide if they want to do so. They always have an option to kind of rerun the negotiations with that initial investor and give them a proposition of diluting this or selling on premium to some other VCs, right? To kind of dilute that huge ticket. So because I don't really see any other possibility to help, because either you would say no, because other VCs, some of them would don't even take the time, and they will be like, okay, this investor has too big of a ticket. I'm not even interested, because I will be shooting myself in the foot. Not only I am getting a higher valuation because I'm already a later ticket, but also when they sell, I'm dying. So why would I do that? It makes no logical sense. And no matter how good the project would be, it doesn't make that much sense. So the only way to start the support would be suggestion of dilution, but you have to be very delicate in terms of the whole spectrum of with what else maybe that VC with that first ticket helped with to the project, so they wouldn't kind of close the doors for whatever they helped with. So it's a very delicate topic. But it's doable. No,
I mean, we could definitely talk more about it, perhaps. You see how it goes, right? I mean, you start talking about something, it leads to the other. In fact, you did answer a couple of my questions in terms of how the investment approach would be different from, Web3 startups as compared to, the traditional models. And speaking of that, let's talk a little bit about, decentralized finance. So in your opinion, like, what has been that biggest challenge, moving from that traditional finance model to, DeFi?
The biggest challenge so far has been the regulatory part. Obviously. And
the banks
banks have to comply with the regulatory. So the banks are only choosing what is already chosen for them in advance, right? Speaking specifically about US regulatory, I do believe it happened kind of in a very opposite way than it happened in Japan. Japan, because Bitcoin is kind of recognized and coming from Japan, as the person or a group of people called Satoshi Nakamoto have released the white paper and have deployed the network.
Deployed it, as in
started the net. So went mainnet, like, so turn it on to make it more simple. Just turned on the network, started the first blocks being mined. And so Japan was much more familiar with crypto in the beginning. So they kind of made it regulatory-wise very heavy for crypto, but they kind of translated the regulatory of regular finance onto blockchain, crypto, and decentralized finance. So all of the products as cryptocurrencies or utility tokens were very early in Japan recognized as either securities or financial products. So all of the regulatory that would comply for the regular banking would also be applicable to crypto. And what happened in US is that they kind of started paying attention a bit late, and they went very harsh on crypto, and in some cases very needed, right? But I do believe it needs a little bit more research, especially from regulatory side, to understand how things work, and then to kind of co-work with more technical people and people who understand blockchain technology more, and who can actually tell regulatory how to leverage blockchain technology against money laundering and financial crime, and so also security and finance, because that's a very tricky thing. They see crypto as something very risky, which I don't disagree with, right? Because of lack of education and understanding and lack of security and some of the contracts. But at the same time, you can leverage, even in regular banking, if you would be mirroring all of the happenings in banking system onto blockchain, you cannot alter anything on blockchain. You can have a hacker go into a banking system and alter all the data.
Right.
But if the data was mirrored on blockchain, not only on cloud, you couldn't change that. It's not changeable.
So the current system is actually at more risk than it would be.
Exactly. But what happens with what comes together with blockchain as well, there is full transparency. And now the question is, do banks want to be fully transparent to everybody, or is it just as they need? I don't want to really dig deep into that, but there is a lot of contradictions in the industry.
There are,
and some of the businesses are used to getting some kind of extra money from their business with not disclosing certain things, which is kind of a gray zone. They're not incriminating themselves, but at the same time they're using ways that giving them extra money that wouldn't be there if we would have had the full transparency of blockchain. So that's kind of contradictive. But also at the same time, do you really want to show to everybody as a bank what transactions do you do if you can be front run on blockchain? No. So you need certain privacy to that. So I do believe the future would be leveraging blockchain technology in security, in banking, in supply chain management, where certain parts of the data would be on privacy protocol. Only if you need to check if everything was all right, you can come back to it as a certain entity which has access and check that out. Because, for example, in decentralized finance, going back to the core of the question, let's say if I am a crypto hedge fund and my strategy is investing in projects, but also shorting, longing them on leverage, and also using DeFi. Let's say I have $10 million and I want to deploy my DeFi strategy. Let's say I'm going to be shorting something or longing something, or I want to buy or just go into the liquidity pool. If it happens that someone front runs me, all of my strategy falls apart, or I don't take as much profit because someone else takes the most profit. Let's say I'm going to short a coin with $10 million on 10x. And the guy, just before my transaction gets in, he sees it and he's pushing something just before me. So he's making money off of my strategy. I don't want him to do that. Okay.
So coming back to the question, I mean, you're saying that...
So what I'm saying in DeFi, we need, first of all, KYC. We need full transparency, which comes with blockchain automatically. But also with certain things, certain particles of that, we need privacy for the sakes of being able to actually profit from our strategies and not being front run by someone else.
Right. And that, I mean, you just answered my question as to how that could be mitigated. But when do you see that?
How could that could be mitigated? That could be mitigated with usage of different privacy protocols.
I see. It's interesting. Web3, you know, is like, I often look at it as a way where I feel like, you know, being in the technology space myself, I feel like there has to be a transition. You can't just, you know, hop off the edge of 2.0 and into 3, but, you know, there's a 2.5. And I'm not sure if that could be an unpopular opinion. But
all of those
how do you see
endings that you're mentioning, 2.5, 3, is just the name that we want to put on it. For me, it's like a river. It doesn't stop, right? It didn't stop, and we cut the river, and there is 2. Then suddenly we hop on the bridge, and there is 3. No, it's all.
It has to be a slow and gradual shift.
What I would suggest, and what I also have mentioned when I mentioned in banking, I said mirroring of the data. I didn't say let's stop cloud computing and let's not store our data in an old school way. I said let's mirror onto blockchain.
Mirror it onto blockchain with the privacy.
So first we mirror the data. Let's say it's the banking system in one bank, and we're mirroring data on the blockchain. Let's say the system got hacked and hacker went in and he altered the data. So the bank now struggles to find out what's the actual data, what should be on this account, what should be in another. Maybe something is missing. Where did the money go? They don't know. They struggle. It's going to take them time to fix this. They're going to fix this, but it's going to take them time. And they don't really put as much emphasis on very high security nowadays, because insurances are very good and very high too. Right. So they rather have some room for error, which they can take up to their capacity and get the insurance and cover the customers. But it's always a mess. It's always stressful. So why do we need that? If you would have mirrored your data on blockchain, you could have seen what should be the right data. And you could actually see by comparison of both where was the entry point of the hacker? Where did he start? How did he get in? And then you can probably tell what was his intent. And by his intent, it's easier for you to tell who it might have been. So it's a whole chain reaction of stuff and how to read on-chain data. So
very nice. Interesting. You know, we've skipped the middle part. I mean, we started off with you being one of the first miners to, you know, the founder of Mirai Dao. What was in the middle there? Like, any specific background that probably led you here? What was, you know, that thing that you may want to change at a certain point in time? You know, you could have done better, or you could have changed something out there that could help someone right now.
Okay, so what did I do in between? In between, I did a lot of research. I kind of ventured into different investments in small amounts. It was mostly into blockchain technology as well. And I lived more of an artistic life as well. And I was kind of searching for myself, so to say, but technology was always a part of that. And I always enjoyed the part of the research. So I was closely observing evolvement of proof of stake, proof of work, Ethereum in particular, then DeFi. And so I didn't really see that particular interest as something as my profession or business or something that would only do for the money. It was a passion for me. It was something that I was looking forward to funnel into more. It was fun. And then I realized, actually, it's very simple, and everybody says that: do what you like to do and you will never work a day in your life. And everybody says that, but when it happens to you, when you come to the realization, it's so obvious. I never thought of that, right? So this was what was in between. I was kind of looking for myself here and there, and I realized that something that I do as a hobby is actually something that is my main thing.
Amazing. So you've surrounded yourself within it, right? And that's probably the best way to go about it, right? I mean, not having to really stress out, or, I mean, you're willing to do
Oh, don't
this.
say that. Crypto always stresses out.
Yeah, of course, with the fluctuations. Any particular trend? I mean, it's just Feb. I mean, the end of Feb, but in 2023, what are we really expecting? Or let's say the next 6 to 7 months.
So there are trends. There are two types of trends in blockchain and crypto. There will be one very commercial trend, which we already see as AI chatbots like ChatGPT, other AI. We had last year, Metaverse was a big hype, but those are kind of, I call them commercialized.
Okay.
Hyped up things that people would be focusing on. And I do believe, in my personal perspective, if something is already spoken of so widely on the internet and the media, and you could look at ChatGPT, Microsoft had an early investment. Did everybody know about ChatGPT when Microsoft was putting their primary ticket?
I mean, they did have a lot of users before Microsoft kind of jumped in.
Yeah, but Microsoft has also, so Microsoft has done a majority acquisition. But how did this happen is that they came on a later ticket, but they had a very early one before.
Right. They did.
Did I hear about ChatGPT at the time? No, I didn't.
Okay.
So what I'm trying to say here, all of those hypes that are highly commercialized are making us a bit, investors-wise, would make us a bit exit liquidity. If something is already so hyped and so widely spoken of, everybody has dipped the finger. Every bigger person, smarter person, and there is always a smarter person than you or me on anybody else, they already dipped their finger before you, and you are their exit liquidity. So there is another thing which would be kind of on the background, what we are looking for, what we're researching, what we think might be the next big thing later. Japan is very good at that. If you look at Japanese projects, they are developing completely different things that we're focusing on right now. So I always take some knowledge from them. I always observe what they're doing. I always ask what they're doing. And they're kind of hesitant to say, but in the end, they're kind of sharing, because the whole idea of blockchain technology is to share it with as many people as possible to put us all forward together. And so I'm looking more into enterprise grade solutions and use cases of blockchain in every single business and governmental entity. That's something that I'm looking for. I'm looking for bringing real world assets onto chain. But when I say that, I don't mean just a bare tokenization of just gold or let's say some tried real estate, less or more, or some would say, especially the ecological freaks, they would say, oh, we want to tokenize carbon offsets, we want to tokenize water. I don't disagree. That's great. But how do you make it work that it actually makes sense? Is there a sense in it? Yeah, we will put this, we'll put that, and then we will check. Maybe it's a bit of this, but it's for a good cause, right? It's for a good cause. This is that's the meaning behind it. Why would you oppose? I don't oppose as long as it's audited. There are projects like Water 150 that are working on putting actual water rights on chain, where they close contracts with different water wells, and they get their water rights depending of the capacity of the water well. And they can tokenize this and they can sell it to someone later. The same with carbon offsets, right? You can do that, but do you have something to measure the vegetation state of the trees that you're looking at? Is it just with one field? It's a bit easier, but if you want to do it globally, it's very hard. You have to use a satellite. So my first question would be, do you actually have resources behind you? Do you have the right partnerships that allow you to make those real world assets on chain that are actually showing the the actual capacity value and can be used with sense, right? That is very important, and that takes a lot of resources, a lot of thought behind it, and a lot of right partnership, especially with governments if it comes to carbon offsets or water. And so imagine taking those kind of assets and then utility tokens that we have nowadays for different products in Web3, and then the proof of work coins as well. And then imagine we can fractionalize some real estate, we can fractionalize some of the actual stocks in regular indexes, or we can just mirror them, right? And then let's take plenty of stable coins pegged to different currencies, fiat currencies, and let's play with them in DeFi and how they relate to each other, how they can ensure each other. That's something that I'm looking forward to in the future, and that's something that I am focusing on as one of the things that I would be investing in, and that what would be the next hype for me personally on the background, right? And there are plenty of layer ones and layer zeros that are in the background still working on that. So I'm looking into those. And second thing is zero knowledge proofs, and definitely focusing on acceleration of hardware in there.
I did want to talk about the hardware aspect, but I think, we would have to set up either another session perhaps, because there's so much more that I could learn from you. On a closing note, like for someone starting out, where or what would you recommend to find out, legit information? If let's say if I was to advise or suggest a 20-year-old or 18-year-old, where to start. But these resources that you go to are 100% legit. To name a few.
So what is the easiest answer would be whichever layer 1, layer 2, layer 0 is existent and has proven to be bear market proof. You can go to the website of Bitcoin, the website of Ethereum Foundation, the website of Algorand Foundation, and they have open source resources from the beginning from the very simple things to the more complicated things. And all of those resources are accessible, but I see people usually taking a shortcut because, all of those white papers in there with all of the descriptions and some math in it, they're like too boring. I don't understand. I'm looking for a little bit of dopamine in crypto. Like, I want to understand it because I want to participate in it, but like, it's boring, right? And then they would go to so-called KOLs. And some of them
elaborate that for me.
So KOL, it's a key opinion leader, which is basically mostly crypto influencer, so-called. And some of them are really interesting people, and they have some technical background, and even when they promote certain coins or tokens or even NFTs, they would actually research beforehand about them and make sure that it's something legit, make sure that's something that they understand so they can talk about it to their audience, right? So they wouldn't willingly harm their audience. But some of those KOLs, some of those influencers would just take it as a gig and, I'm being reimbursed for promoting this Web3 project, so let's promote it. But as soon as he starts promoting it, you as a community to this influencer, you are his exit liquidity. Because when the community starts buying, all of his viewers, all of his followers will start buying that particular token. The price will rise.
That's what they want.
What is the compensation for the influencer? It's usually in the token. So let's say he has, for example, 100,000 tokens of token A. He promotes token A. His community buys token A. Guess what he does? He sells token A. And all of the holders of the beautiful token A now have the fairy dust.
That explains all the yard parties or the huge events, the extravagant.
Well, not always, because some of them are thrown from the marketing spend for the company. And for example, we had a beautiful event at the Jumeirah area from Algorand. So that was basically from the marketing spend, right? That was something that was planned to be spent, and nobody was told to buy Algorand. They were just told to build an Algorand, get some interest, learn the SDK. That was more of an educational and building event than sales. There was no sales in there.
Okay. So
and everybody enjoyed.
Okay. All right.
So
now I know.
I just wanted to say that not all of the parties are bad, but some of them, who knows?
Okay. Well, I look forward to the next invitation to a legit party. Let me know. I would love to be part of that. So thank you so much. I mean, this has been super insightful. I think we'd have to have a couple of more sessions. There's a lot that I would like to learn, a lot that our audience would like to learn about that, but definitely, it's been real helpful for the entrepreneurs working in that space, kids looking to rise up within the crypto and Web3 space. So guys, thank you so much for watching. Stay tuned. And yes, we will be highlighting all these bullet points when we put this on YouTube, our channel, Technology for a Change. This is Hady Sheikh, your host, signing out. Thank you.